Hey guys, welcome back to my YouTube channel. Today we are going to go over options. As you can see what I've got above me, I've got a bunch of different doors. We have a bunch of different options. I think we've got AMC, Peloton, Etsy up there. We've got Save. In this video, I'm going to briefly go over what options are and the different type of options, and then going to kind of explain to you on Robinhood how, you place your first options order or how to understand everything. Because when you go to the options screen, there's going to be a lot that is going to be confusing. So yeah, let's get right to it. And I hope you enjoy this video. So let's just jump right into it. What is an option? A stock option basically gives you the right, but not the obligation to buy shares at a certain strike price, right? By a certain expiration date. So you've got you and you've got this other person who's selling, right? And you guys make an agreement that by a certain date, which will be your expiration date, which is typically, it's always on Fridays, right? That you're going to agree to buy these shares at a certain price. Okay, and I'll do some examples and I'll get into it. But just to start, I just want you guys to know the full-on definition of it first, right? So it is a contract that's giving you the right, but not the obligation, which means you do not have to purchase it, but you can choose to purchase it. And we'll get into that as well in the video. All right, guys, so there are two terms you really need to remember, okay? So calls and puts. So calls are going to be when the stock is going up and puts are going to be when the stock is going down. Really simple to remember. If you are betting that the stock is going to rise, you are going to place a call, right? And if you are betting or you want to get a contract that the stock is going to fall, you are going to get a put. All right, so here is all our options that we are going to be working with today, right? So we've got AMC, SNDL, Save, Apple, Etsy, Peloton, and Workhorse, okay? Let's just go with Spirit Airlines to start, and then we can run through a couple different options on a couple of the other stocks. All right, guys, so we open the Robinhood app, and we're going to go ahead and search for Spirit Airlines. We're going to tap Trade Options. Here's your screen that's going to, this has got some awesome tips on it as well if you think it's going up or down. We're just going to go ahead and move up here to the expiration dates. So all these up here that I'm scrolling along right now are all expiration dates, right? So these are the dates you want your contract to expire. I'm going to start with April. Let's do April 16th. I'm going to scroll down, and these are going to be all of my options, okay? And let's see. Perfect. Here we go. So here is our screenshot, right? So we've got our screenshot up here. We're looking at our expiration dates. We chose April 16th. Just a couple reminders. Make sure you're on buy and call, not sell put. We'll get into that in a different video. Today, we are just working on buying a call. So buying an options contract for Spirit Airlines because we believe the stock is going up. And just like I said, this is just for educational purposes only. By no means am I saying go out and buy a Spirit Airlines contract. So this video is just to kind of show you what options is and how to execute this. So in this screen, getting back to what we were talking about, in this screen, we've got our share price right here, which is what Spirit Airlines is currently trading at. So $35.55. We've got all our call options right here, right? These ones up here are because they're above the share price. So anything that's down here is going to be below the share price, right? And then we've got above the share price. And there's going to be specific terms that we use to these: in the money, at the money, and out of the money. And I'm going to go over that in the next video as well to explain some more things for options. I just don't want to overload you with a bunch of information, especially if you're just beginning, because I remember when I started watching option videos, it was extremely confusing because you got all this information you have to take in. So just starting really small and learning the options is the best way to go before you start overloading yourself with too much information. So let's take a look at our calls that we got here. Okay, so we got a $35 call, we got a $30 call, $25 call, and a $22.50 call, right? These over here that we're looking at are the prices of the contracts, okay? So just remember that every contract you buy is for 100 shares, okay? So it's for the right to buy, not the obligation, but the right to buy 100 shares of Spirit Airlines at $35 a share. So if I wanted to do this contract right here, Spirit Airlines is already $35.55.
So do I believe by April 16th that Spirit Airlines will be $35 or higher? Yes, I do. So let's say I want to buy this contract, right? It's $4.15 per share, and each contract has 100 shares. So that would make our contract price $415. So for $415, basically, I am getting the right to buy Spirit Airlines at $35 a share. Okay, now let's say Spirit Airline goes to $38 April 14th. I can exercise my contract, and I'll show you how to do that in a minute as well. I can exercise my contract, or I can just sell the contract for whatever the cost the contract is at that moment. So let's see. What is the break-even price, right? So the break-even price is honestly the price I pay attention to a lot, because yes, I care about the call price or how much I'm buying them at. But if you're overpaying for a contract and this break-even price is way higher than what the stock actually has a chance to get to, then it's really hard to make money, right? So I'm going to explain to you how we get the break-even price. So the cost of the contract is $415. And that's $4.15 times 100 shares, okay? And then if you exercise your contract, which means if you decide, okay, I want to buy my $100 or my 100 shares at $35 a piece, your contract price is going to be $3,500. So $3,500 plus $415 is the price of the contract, right? So add those two together and you get $3,915, right? Divide that by 100 shares because you're buying 100 shares. And that makes each share $39.15. So yes, you're technically buying them at $35 a piece, but take into account the price you paid for the contract, which makes them actually altogether you're paying $39.15 per share. Now, if Spirit Airlines is around that price or even going farther than that price, then yeah, you can cash out your contract or exercise your contract and already be ahead, if you plan on keeping those shares long term. Or like I said, you can sell your contract.
Okay, guys, so moving on, it looks like on my screen right now, we've got Etsy. So now I'm going to show you guys what to do. What happens when you buy your contract, right? What are your options? What do you do? Are you choosing to keep this long term? Is this something you wanted to invest in long term, so you wanted to get it at a cheaper strike price? Or is this something you wanted to trade and make profit with, right? So you make profit off long term as well, but is this something you simply bought the contract for the contract price to go up and now you want to sell for a profit? So let's take, here's one of my contracts. For example, here's Etsy. It looks like I bought this contract. Honestly, think I bought it about a week ago, right? So it doesn't expire till the 12th. So we've got 2 weeks. It looks like I'm up right now, 89% return. So I'm up a pretty good profit. I bought it when it dipped down. I have a couple different options, right? So at this point I can click trade and we can go to the screen where I'm going to sell the contract. So here we go right now. It looks like this contract's trading at $28.88 is what the current price is. It went as high as actually $37 on Friday, I believe. So I can choose to sell it right now at $28.88, or I can put $30 in that spot if I want to sell it for $30, whatever the situation. Not $30. This is $30 times 100 shares, guys, okay? Or I can choose to exercise my contract, which you click exercise. Sorry, it's going faster than what I'm speaking. You can click exercise and it's going to be one contract fulfilling and it's $19,500. Remember, the strike price is per 100 contracts. So it's $195 times 100 contracts, right? So looking at it right now, with those options that I have, my break-even price is $212.55. So let's go take a look at the actual Etsy stock, right? It's already at $220. So I'm already way above my break-even price. I'm already well into a profit. This is actually one of the stocks that I want to long-term hold. So, looking at this 1 month, 3 month, 1 year, and 5 year, it's got great numbers. It's got great movement. Yes, it is pandemic ran, but it's also something that not just the pandemic is running. Etsy has growth not just because of the pandemic. So to me, Etsy is a great long-term holding. So why wouldn't I want to buy Etsy at $195, right? But don't forget to take into account the price you paid for the contract, okay? So technically my break-even price is $212 for Etsy. So if I was to exercise this contract at $19,500, you know, my price that I paid for Etsy would be $212 each share, technically. And right now Etsy's already trading at $220. So I'm already exercising contract into profit, right? And that's if I wanted to long-term hold it. Or like I said, I could sell it, just like I showed you on the screen, sell it for $28.88, which would give me $2,880. Considering I paid $1,700 for the contract, I think that's $1,300 profit at its low end. So, I mean, that's a pretty good profit to hold on to a contract for a few days. Not bad. It's like a 90% return. So I'm happy with that too. You know, options always come around. Okay. So my best piece of advice is never jump into an options contract because the stock is all of a sudden going up, right? Because you will get fucked. Excuse my language. Don't even know if I can say that on YouTube, but you will get screwed. And I say that because a lot of people follow other people's plays, right? So there will always be opportunities to buy. And my biggest mistake when I first started trading options was, oh my God, the stock's going up. Like, I'm not going to have a chance to make money. So let me just buy into it. And when you buy when it's up, you leave no room for yourself to buy when it goes down, right? So my number one rule when I trade stocks, and I'll get into this in another video as well, like the strategies I use and the things I look out for. But my number one rule absolutely for myself that I use is if I can't afford to buy two of those contracts, right? So Tesla, for example, I actually don't trade Tesla. I trade Tesla stocks, but I don't trade the options. And I don't because they're like $10,000, right? So I'm not going to buy one Tesla contract and not have any room to buy one or two or three more contracts. If that options contract goes down, what I like to do is average down with contracts. And I do that by, if that contract price goes down, I buy in again when it finally hits its dip, if I have enough time on my expiration. And then as that one goes up, I sell that one, which will help me recover losses from the original contract I bought. This strategy has worked really, really well for me. I do it constantly with day trading contracts and whatnot, but I always keep like the one contract that I possibly want to exercise at the end. So if I trade 5 Etsy contracts in one day, no matter what, I'll always keep my one contract that I'm actually going to long-term keep, or exercise and keep. So yeah, I think that's it for this video. If you guys have any questions, please leave them at the bottom. I will do my best to answer them. If you have any video requests, put them at the bottom. I respond. I know this video took me a little bit longer to get out than I said it would, and we have baseball going on, school's back in, so it's just kind of been a crazy week, but I am definitely here and I'm committed to help wherever I can. So make sure you guys like, comment, and subscribe, turn on notifications, and watch out for my next video. Thank you.